Hello, this is an update for the E-mini Dow Jones Futures YM on July 5th, 27 minutes before the open of the standard market hours. And YM just created a low at 30,647. And I would actually like to try a contrarian long here for your consideration. Trade on at your own risk. In the past 5 hours, the market has been selling off in a quite even surprising way, or not, but it's been selling off. And Credit Suisse also announced that it's cutting its end-of-year forecast for the S&P, which caused some increased selling. However, looking at the high risk reward versus risk potential, and looking before the US Open, and looking at lows like this, okay, which is the low of 20 of May, which is at 30,585, not very far from where we are now. And also looking at the high volume node that we have over here at this volume profile. This is a high volume node. The highest is the POC up the top. And also we've got the blue line, which is the value area low, and price it just lost it now, but it may reclaim it. And this is by definition a lower probability trade, so you don't have a high probability to win, but you do get a compensation with the higher reward versus risk, as we will see soon. I'm also looking at these lows. I'm looking at the fact that some people might be going short and need to cover at the market open, so they might be trapped. And also looking at this level, okay, which we're here, close to here. I'm looking at that as potential with these lows, that it will create possibly a higher low and then bounce up. So if you catch it quickly or early, then it is possible to reap the benefits of the high reward versus risk, as mentioned. In these situations, we must have a stop, like in every situation, especially when, by definition, we're going on something that is a lower probability, and it's a bit counterintuitive because usually people look for the confirmations, etc. So what we'll be doing, we'll be entering at the current price, okay, 3663, okay, 3663. Could have entered a little bit lower, but we had some explained, so it doesn't really matter that much. And our stop will be below these lows. So we'll be risking, let's say, exactly 1%, 750 points. And then our reward, but because we're going for a lower probability, we want to take a profit one in this area of 31,770, okay, and another one all the way up to the POC, which would be 32,900 nearly, okay. So that's more of a 7 to 1, 7.25 to 1. The other one was 3.5. If you exit half a position here and half a position there, the total is 10.75 divided by 2. That's 5.375 risk reward. Okay, close to 5.5 reward versus risk. That's quite a nice one. let's put the entry at where it is now. Let's put it even close to the 350. It doesn't really matter that much. The reward versus risk is close to that. I just want to get the most updated price. Let's say 650. We'll lock that in as the entry price. Okay, so the point is that you catch a low probability, higher reward versus risk, which is a bit contrary. Most of the public will be shorting, but you put your stop below that, betting on the fact that it won't go down further. Okay, and if you win, you get, as I mentioned, a higher than 5-to-1 reward versus risk. This is something that is uh, um, at your consideration. Trade the E-mini Dow Jones only at your own risk. Good luck, and let's see what happens.